Ladies and gentlemen, boys and girls, thanks for tuning in to yet another episode of Engine Room, the only podcast in crypto that matters, brought to you by tokenmetrics.com. Today is Monday, December 13th, and we are joined, as always, by Jacob and Bill. What's up, guys?
Hi.
Hey, Dylan.
I think the main thing we want to talk about, well, not the main thing, but the first thing that we want to bring up right away is that this very promising Metaverse project called Vulcan Forged, which has seen some pretty serious price action, made a lot of people rich since its inception. It's got a bit of bad news today. It seems that 96 different private keys were actually stolen from Vulcan Forged servers, and this is basically a hack that ended up costing the company $140 million. It's about 25% of its total token supply. What we know so far, as this is very fresh news happening today, they've already recuperated about half of that loss, but that still leaves $70 million out there floating around on the blockchain that used to belong to a bunch of enthusiastic Vulcan Forge supporters, now belongs to some anonymous hacker. So we understand that they're going to be issuing, that the company is going to be issuing lava and PYR tokens to people who were affected. But I want to ask you guys, what do you make of this? We just had a Metaverse project basically get hacked. What happens next? This was supposed to be our salvation, right?
I mean, I think their first mistake was that they were holding funds for people. They had their own crypto wallets, so the users who had the millions of dollars worth of PYR tokens didn't have the access to the keys. They didn't have it in their own possession. So I think that was the first mistake.
Yeah, it's the famous "not your keys, not your coins" saying from crypto. Until you control your own private keys, you theoretically don't actually control or own any of the assets those keys pertain to. So yeah, it's no surprise to see that the company is talking about how it might go semi-custodial, which really means non-custodial, in the future in order to prevent anything like this from happening again. Bill, what do you make of this semi-high-profile Metaverse hack today?
Well, as with anything new, right, they have to iron out the kinks, right? So I don't think we can go, oh my God, the Metaverse is over because there was a Metaverse hack, because there's a DeFi hack twice a month, right, that is noticeable. Now, how these protocols are handling crypto is probably a function of the fact that they're probably trying to expand their business operation fast enough to keep up with the FOMO-based price action. You know, it's one thing if you're a startup and you go to work and your token's at 5 cents, that's a certain level of work stress. Then if you go to work and your token goes from 5 cents to $40, you're like, uh-oh, you know, we better figure out how to deliver. And it sounds like, you know, obviously the correct steps weren't taken to safeguard that amount of crypto. I mean, that's, like you said, part of the token supply. But big picture, for like a podcast thinker out there, I mean, this is not like, you know, you don't wave the magic wand and the Metaverse appears. They're going to have to work out the kinks. Bad people are out there. You know, if it was really a problem, Vulcan Forge would be at 0. It's only down 25%, which, you know, for the Metaverse is, you know, it's a 3-day
within
move.
Parameters.
Yeah.
Within parameters of a day's price action, perhaps.
Yes.
Yeah. Anyway, let's now change gears to talk about Mr. Kyle Samani, who is the co-founder and managing partner of Multicoin Capital, basically a crypto investment fund that's got quite a bit of Solana on its balance sheet. The company has done very well for themselves, but Kyle is in the news today because he's got a very interesting tweet storm that basically outlines this argument. Well, it's a long tweet storm, but he seems to be saying two things that stand out. The first is that there is tension in crypto between what he calls money crypto and tech crypto. And then his secondary thing that he's really trying to put out there is that as soon as the price of Bitcoin is flipped by another asset like Ethereum or as he probably actually hopes, Solana, then BTC will be dead. So you can probably predict that crypto Twitter did not take terribly kindly to this. Over the course of, let's see here, 21 different tweets, Kyle Samani's basically making an argument that Bitcoin is on its way out when it's got about 10 years worth of history demonstrating that to be the most resilient digital asset. Michael Saylor calls it the hardest money ever created. It just doesn't happen to be called Solana. So it seems, my casual take is that it seems like because it's not called Solana, Samani is kind of trying to get a chip in against the big boy, as it were. What did you guys make of this tweet storm? And is it nonsense? Is it credible? What do you think?
Okay, well, there's a lot to unpack here. All right, so you have to start with the fact that the guy does have a huge Solana position, and he's basically telling you after Solana broke support at 180, basically I'm not selling Solana because if you sold software stocks on a 2018 correction, you missed out on phantasmagoric gains. Mm-hmm. So, one, I'm not selling Solana. Two, when you start messing around with the Bitcoin talk, and if you also, read the tweets, he's basically saying that people who know the most about technology know what the future of crypto is, right? So he's basically saying, ignore the market, ignore interest rates, ignore the Fed. Crypto is not a risk asset. Crypto is the future of technology. And I'm not selling the future of technology, and neither should you.
Yeah.
Okay. So, Jacob, I can go on from there. Let's let Jacob take a shot.
Yeah. I'll quickly throw out that I really, really enjoyed seeing this tweet from Neil Jacobs that basically makes a mockery out of Kyle's comments. So Neil Jacobs is a hardcore Bitcoin maximalist who hosts a Bitcoin podcast, and perhaps predictably, he did not snuggle up nicely to this commentary. So he made a pretty a rather humorous video using Kyle Samani's face. If you want to check that video out, go find Neil Jacobs on Twitter. His name is Neil Jacobs, Neil Jacobs. Anyway, Jacob, what do you make of this tweet storm?
Yeah, so I like it and I don't like it. I think there's a lot of parts and a lot of points that he brings up that are very accurate, and they put it there. It's a good portrayal of kind of the current climate of crypto. I do actually like how he split up crypto users, enthusiasts, investors to have you have money crypto and tech crypto, and pretty much he also did a comparison to the dot-com bubble, the early 2000s, late 90s, where people were investing in a bunch of internet companies, and he's saying, like it is back then, if you had sold internet companies, then that was the future. So why would you sell the future of internet now, which is crypto companies? But there were so many internet companies that went under, that died. There were only a few that made it out. So I think that's a little bit of a flawed comparison. However, I do see what he's saying, where he's pretty much, like Bill mentioned, forget interest rates, forget what the Fed's saying, forget these dips, this volatile market. If you want to be invested in the future, then hold on to your Ethereum, hold on to your Solana, which I agree. If you're not a trader, if you have a long-term investment horizon, then yeah, just buy more at the dips and continue on, because it's pretty much guaranteed to go up. I disagree with his kind of crackdown on Bitcoin, how he said it's pretty much useless. I do think there will be a flip happening where Ethereum will probably flip Bitcoin in market cap, but I don't think that's going to kill Bitcoin. I think Bitcoin's pretty much, it's like Bitcoin's boring. It's the boring boomer crypto. People, there's still trillions of dollars invested in bonds, government bonds, etc., real estate bonds. Bonds are very boring. And I think Bitcoin's very boring, but it's still a safe haven. These super ultra high net worth individuals don't want to make money. They just want to keep their money. So that's why they give their money to money managers, not to get crazy gains, but that's why hedge funds hedge their positions, because they just want to keep their money. They don't want to make money. They don't want to lose money. They just want to keep it. I think that's what Bitcoin will be in the future. Just a place to kind of a safe haven for your assets.
A super resilient stable coin of some sort in the future.
Pretty much, yeah.
Interesting. Well, we'll see when we get there. Guys, our last story of the day. This is a weird one. And perhaps predictably, it involves Facebook being kind of a dick. If you open up the New York Times, you will read a story with this wonderful headline here. Her Instagram handle was Metaverse. Last month, it vanished. This is the New York Times reported story of an Australian woman in Brisbane named Thea Mai Bauman, who was an artist who was into technology. She had a business called Metaverse Makeover, and it seems like the nature of this business was she would sell fake nails that had a design on it, and then you could point your smartphone, your camera phone, at these nails, and they would make some animated or 3D thing appear in augmented reality. Pretty interesting idea. She was doing this before Snapchat was a thing. She was doing this well before any talk of Metaverse like we're talking about it this year, well before any of that was a thing. She had this account for over 10 years. She never really had more than 1,000 followers, but one day last month, shortly after Facebook changed its name to Meta, she woke up, logged into Instagram, and was blocked on the premise that she was impersonating somebody. I kind of want to throw it to you guys here now. Are we surprised that Facebook would do something like this? I know I am absolutely not surprised.
No, not at all. And I think one other point to the story is interesting is that right after Facebook changed their name to Meta, she had two friends call her. One said, "You're now a millionaire," and the other said, "You're going to lose that handle." And sure enough, a couple of days later, she lost that Instagram handle. But yeah, it's not surprising. What's surprising is she now has the handle back. They gave it back, and maybe that's because New York Times got a hold of it and reported it.
Yeah,
Facebook was like,
I don't see any way I don't see any way that Facebook can look good after a story like this in the New York Times. So it only makes sense that she should have the handle back. But
the only thing I'm surprised about is that.
Well, let that be a warning about dealing with large centralized businesses, perhaps.
Yeah. How did the New York Times get the story? I mean, did she email the New York Times? Or was the New York Times following her on Instagram and saw the account? I mean, that's what I used to be a reporter.
Take an educated guess. I definitely doubt that the New York Times was following her on Instagram, but my instinct would be that this artist in Australia or one of her friends contacted media. I bet this probably isn't the only outlet to cover it, but the fact that the New York Times covered it definitely means something big. Theoretically, that's an outlet that Facebook returns phone calls to, as opposed to some small blog.
Probably picked up in like a smaller Australian news, and then the New York Times picked it up and was like, "Oh, we should cover this."
Yeah, but the short answer, Bill, is somebody told the reporter, "Hey, Facebook's being shady, and it's a story."
Right.
Yeah.
Well, I mean, to me, go ahead.
No, you got it. Go ahead.
So, this will show you how seriously Facebook is taking this metaverse, right? In other words, they want to own everything, man. They want to own it all. They see what's going on in crypto. Now, somebody, some low-level manager probably slipped up with this. I doubt Zuckerberg said, shut this person's account down.
Yeah.
But Zuckerberg is going to have to write this. I can't imagine the check that's going to have to be written to get this handle from this woman. Okay. But it's an example of two things. One, how serious Facebook is about it. And two, that there's going to be ongoing metaverse news flow, right? Like today, it's a negative metaverse headline. But Facebook has undoubtedly got a PR group that every so many days or quarters or months, Facebook's going to have a metaverse development. And as Facebook rolls out what they view for the future, okay, that's going to be a catalyst for metaverse tokens. Now, hopefully, it's a positive catalyst. But this metaverse narrative, we can say as crypto people, okay, it's not going away, because crypto people always say that. But it's not going away because Facebook's PR earnings machine has to continue to generate the narrative that's one of the reasons why I think the crypto metaverse is so interesting. Like, the big player is going to continue to focus investor attention on the space.
Mm-hmm. Yeah. I don't know. It's just a very predictable and unfortunate thing. Yeah, and as I'm reading this story, as we're talking about it, Bill, it turns out this is a New York Times original. This woman only got her Instagram account back after the New York Times contacted Facebook, after they contacted Meta, they would want us to say now. Right. So yeah, we know which side the bread is buttered on here.
Yeah, I mean, how incredible is it for the metaverse as a whole that the New York Times and Facebook would be involved? I mean, if you went 3 months into the past and said we would be doing a podcast about the New York Times calling Facebook out, fighting over a handle related to the metaverse, and all the coins were trading at 3 cents, what would you do? Buy or sell the 3-cent coins? Not investment advice. I'll just leave it up to you to think about it. That's where the metaverse is. It's at New York Times versus Facebook.
Yeah. Exciting stuff to be charting. And not only do we talk about this stuff on this podcast called Engine Room, but you should also be checking out the YouTube channel here, everybody. Go do a YouTube search for Token Metrics. We just recently crossed 100,000 subscribers, and we'd like you to be the next subscriber. You can watch or listen to this podcast. You can consume a variety of other videos there. We've got interview shows. We've got market analysis. We've got coin picks for potential investment. But if you are listening or watching to this podcast and you like what you hear, come hang out with us on YouTube, where we've just got a lot more of this and a lot more different flavors. Jacob, Bill, any parting thoughts before we wrap this thing up?
No, man, always a pleasure to be with you. Like and subscribe to tokenmetrics.com, the sponsor of this podcast.
Right on. Until next time, guys.